The main one is, what is future guidance on a stock's earnings? And
all right, so in a very simple sense, earnings tell the story of the stock's last quarter, right? So that paints a certain picture of itself. But what we find to be more important is the future guidance. Now they're going to guide, we're expecting to do this next quarter, next fiscal year, whatever it may be. That's guidance. So you see a company guide up, they're expecting a huge next year, and a lot of times the stock cares a lot more about future guidance than the current earnings numbers. I'm not saying that's set in stone, but it's a lot of times. If I think a company has decent earnings and then they raise guidance, I'll be much more interested in the stock. So guidance is telling the story of the future, and stocks are forward looking. So that's why we think it's so important.
Yeah, so like what Jake was saying, earnings per share, that tells you the past. This is what typically new traders focus on, they anchor towards, but it's not really as relevant because it's just telling you what has happened. Future guidance tells you what the company expects to happen in the future. The market cares about the future. Smart investors care about the future with forward guidance. You typically hear this in the earnings call. You hear it from the CEO or the CFO saying, like Jake said, we're expecting to increase business X%. That's their future guidance. They're not going to say, cut and blankly, this is our future guidance. They're going to say it in a very optimistic statement, and that's where you kind of hear it. You'll hear it in the earnings call, and that's where you'll see a lot of times after hours, you'll see stocks fluctuate dramatically around the time those earnings calls come out, because that's when investors who are listening to those calls hear that information and then can act on it, where the newer trader typically just looks at an earning per share beat or miss and thinks that's what's going to happen.